Well, I think it depends on two factors. First of all, since U.S. equities are going up on the back of strong growth, generally that's going to give a lift to all Asian markets, although we've been a little bit slow this morning, as you mentioned. The second thing I think that people should focus on very carefully is how do U.S. treasuries react to those stronger payrolls figures. And it was very interesting to see what happened overnight. First, we had U.S. Treasury yields rising by around 7 to 8 basis points. But then very quickly we had buying, which drove the yields down, and we finished the day only around 1 to 2 basis points above where we'd started off. So as long as U.S. Treasury yields remain fairly low, people are going to, I think, in the emerging markets feel very comfortable about the overall situation. They'll say, on the one hand, U.S. growth is still doing quite nicely. On the other hand, the Fed will still, looking at U.S. Treasury yields, feel the situation is under control, and probably be in no rush to either accelerate the tapering or raise interest rates more quickly. So in this kind of backdrop, I think generally we can see emerging market equities do well. Well, the area that we like the most in Asia is China. This is actually not so much a global story, but it's really a Chinese domestic story. We think that the Chinese government changes which have been taking place in kind of stealth mode over the past 3 to 4 months are paying dividends. We're seeing the Chinese economy enjoying both a bit of a cyclical rally, which is a typical seasonal trend, so Q3 should be good. We're seeing PMI indices improve. We're probably seeing people feel a little bit more comfortable as well with the medium-term outlook in China because of the changes that the government has made. And that should drive the H shares to around 11,000 from just under 10,400 over the next 2 to 3 months. The other markets that we like are markets where we think the valuations are attractive and they're still geared towards a recovering US. So that would be places like Korea. It would also be places like Taiwan, where these are markets where the sensitivity towards US exports is pretty strong.